All right, Greg Flowers, what's going on, man? Thanks for reaching out.
Yeah, no problem. Thanks for taking the meeting. I appreciate it.
That's my pleasure. So what's going on?
Well, I just kind of have a question about where I should go next, basically, in my real estate journey.
Okay.
So just a bit of a background. I'm from Houston, and I purchased a condo that I was renting currently back in 2014. I'd lived there for like 4 years, and my landlord agreed to sell it to me. And I didn't know much about investing at the time, just didn't have that financial education at all. And then 2 years ago, I moved up towards the Fort Worth area, and I decided to convert that condo into a rental. And that's gone really well. It cash flows a little bit each month. And then I rented a house for about 2 years, just trying to figure out where I wanted to land in DFW, where I wanted to purchase. And in April, I closed on a pretty good sized duplex in the South Fort Worth area.
Awesome.
Like 12 minutes from downtown. I bought it off market as well. So it's really, I saved for like 2 years just grinding and doing everything that they tell you to do. And now I'm here and I've got the duplex, I've renovated it, I've got a tenant already in there that I inherited. And that's just been my mission for the past 2 years is save, find the property. And now I've crossed that finish line, but I'm not really sure where to go next.
Okay. Interesting. So you're going to move into half, true? And the tenant's going to be in the other half?
Correct.
And is the income from the tenant covering the whole monthly nut?
No, it's about 2/3.
Okay, that's pretty good. So you're going to be able to save even. Is your personal housing expense down in the duplex than it was when you were renting the house yourself?
Well, I was sharing it with someone at the time, so it's actually about the same. Probably a little bit more expensive with some of the utilities, but overall, I'm about the same.
Okay, good. Well, so what are you thinking? I mean, obviously, a duplex. There's a thing that I kind of just talked about over the years called the snowball strategy. Have you ever heard anything about that?
I have.
Yeah, it's a very simple idea, and you're doing it right now. So you live in a place, your first place, you leave. Instead of pulling your equity out to buy the next place, you live a little more modestly because you leave the equity in it, keep that thing in your wake as part of your beginning of your real estate pile, your ownership stake of the country. Now you go into a duplex. Are you thinking about doing the duplex for a while till you save enough up and buy another duplex and just do the hop skip and try to move how long did it take you from when you moved from Houston to Fort Worth? How long were you in the rental house that you were living in?
2 years. My plan was 1 year, but I'm in sales, so it's, either all commission or salary plus commission.
What do you sell?
And well, now I sell 18-wheeler trailers, which is my main background. But I switched that is why I moved up to DFW. But then that job didn't work out, and I got into digital marketing software for small business.
Okay.
But I had to wait. When I got that company, it was in November of 18, and in February of 19 was when my 1-year lease was ending. So my plan was to buy a house, but the hurdle I had to jump was the bank could only finance me based off my salary.
Okay.
In sales plus commission, your salary is usually not too crazy high.
Right.
So it just ended up not being the right time for me to move. So I ended up renting a second year, unfortunately. But at the same time, it brought me to this place. I mean, I found it probably in October. What's that?
How old are you, Greg?
How old?
Yeah.
36. How old are you?
I'm 51. But by the time you're my age, you're going to realize that 2 years is like that, right? So I get that you pushed a year further than you want, but that's not bad. So you essentially saved enough in a 2-year period to buy the duplex?
Honestly, it was probably a year period.
Okay.
I did pretty good at my job. I also started, I had a couple side hustles as well. I started flipping trucks. So I will fly out of Texas and find a vehicle that somebody just doesn't want, like a truck, usually a truck, and trucks are big in Texas. So I'll bring those back to Texas. I'll dress them up, clean them up, and then just take good pictures and sell them. And so that really fast forwarded my down payment.
So you're flipping trucks and then you're buying rental property. So listen, what's wrong with the plan that you're on? Just continuing to do it. If every 2 years you made another acquisition and either you move out of the duplex to another duplex or you stay put and just duplexes and single family, those 1 to 4 family are my favorite. Duplexes are awesome. Single family is great too because single family from a living standpoint, you might eventually want to be in one of those where you got all 4 walls all to yourself and everything. And
Yeah.
when you go to sell it, you'll be selling it to a home buyer most likely. At least there's a decent chance of that. But that snowball thing at your age, if you kept that kind of pace up, you could be my age and have 10, 12 pieces of property or 10 or 12 units under your belt. Does that sound like about what you want to do, or are you looking to accelerate it faster than that?
Well, obviously as fast as possible. We always all want to retire sooner than later. And my strategy is the long-term hold, just to pay them off and live off the residuals. But I guess what my main question is, sure, I want to acquire more, but to take my condo, I've got quite a bit of equity into that at this point.
Right.
And if I was aggressive enough, I could have it paid off by the end of next year. And after that, I'll probably bring in about $750 per month if it's paid off. Now, would you start rolling that into the duplex and just try to pay off the duplex next?
How much? What percentage of the condo is equity? What percentage of it is a loan?
I make, after all my expenses, I bring in about $183 a month. It's on a 15-year mortgage.
And what's the balance on the mortgage right now?
I owe probably like $34,000.
And what's it worth?
It fluctuates around 103.
Okay, so a couple of twists. That's interesting. So you've got I like pounding down the mortgages right into oblivion, but I'm definitely in a place where I'm looking to trade cash that I earn for income that I'll earn in the future, right? So I've been buying things almost all cash or all cash and taking small mortgages. I probably would be smarter if I had just 50% mortgages on everything because I'd have twice as many houses. So like one option, just an option in the condos thing is to refinance that and get a 30-year loan on it. All right. So it's not you have the ability to pay the 15-year payment on a 30-year loan and it will amortize in 15 years. You aware of that?
Sure. Yeah.
So all that happens when you take a 30-year loan is you pay a little bit more interest because the rate's a little bit higher on a 30-year loan, but they're ungodly low right now. So that's actually pretty well mitigated. And B, it's almost like you have an option. You can make the 30-year payment. If you want to make more positive cash flow, you can make the 15-year payment or the 10-year payment or the 1-year payment like you were talking about and just bang the thing down. But you probably could refinance out of that condo with some equity. If you took a 30-year loan out, your payment would be similar to what it is now, most likely, which means you'd have the same $180 a month coming in from that condo, but you would have pulled out maybe $30,000, $40,000, which you then put into a down payment someplace else. Now you've got a bigger real estate footprint. You spread the equity out in a way that's still responsible. If you have 40% or more equity in a property, you're being very responsible with that. You know that, right? I mean, that's like tenant moves out, you're not going to get killed by the payment, right? Except that the 15-year loans are awesome, but you're obligated to pay that higher payment no matter what. And so that's one decent little possibility is to hang on to Houston, pull some equity out of Houston, but go 30 years on it so that you don't kill your cash flow.
And that was my other scenario. But then you start all over. And like at the end of the day, I can't retire if these things aren't for the most part paid off. Like everyone's always talking about the Burr method and refinance, because we're taught to acquire as much real estate, but we still have all that debt. So, but if I can get the condo paid off and then the duplex paid off, I think in 5 years or so, I can get $2,000 per side. And so then all of a sudden, let's say the duplex is paid off, which is going to take, a decade and a half at least, unless, I just come into money and obviously just save, right? But It's, it's 300 grand plus, so it's a lot to pay off. But if I do, then that's 4 grand per month, roughly. Then you got property taxes, sure. But nonetheless, let's call that 48 grand per year.
Right.
And then, so all of a sudden in 6 years, plus property taxes, I'm able to buy $250,000 homes paid off. And then that snowball is really killing it too. But if I continue to refinance, then I'll never really truly catch myself. Or
you're right. And I get the plan. That's why it's there are people that would tell you that it's a better idea to spread out and get more property, because of course if you've got 3 pieces of property instead of 2 and the property values go up 5%, you're getting 5% appreciation on more of a footprint, right? And there's something attractive about that. Finding the balance there is a personal preference, right? So as an example, I sold something in New York, a business. I got $1 million out of it. I bought 2 cars and 4 houses. Just put the money. None of it went to the stockbroker. He's like, "Okay, what do you want to do with it?" I said, "It's already spent." So I bought 4 $200,000 houses for cash. Maybe more like it was like 850, 875 for the houses. And then I bought a Porsche and a Mustang because I wanted to reward myself for having successfully sold a business.
Awesome.
Yeah. But the houses, like, it was one of these things where the houses were such a responsible play that I could be an idiot with the cars and get 2.
Yeah, I get it.
My wife was like, 2? I said, I bought 4 houses for cash. So I'm like doubly responsible right now because I only got 2 sports cars.
I've been buying brand new tools left and right and justify it that way too.
But but it's really true that, like, I see the rates where they are. I should go refinance these houses. If I took $800,000 worth of houses and I refinance them at 50%, I get 400 grand. I can go out and put that down 50% and buy another 8 houses, right? So now I'm sitting with, another 4 houses, and now I'm sitting with 8. The reason I bought these particular houses in this neighborhood is that they're in a town that is getting a train station, a commuter rail station in 2024, right? So I think these little $200,000 houses are going to be worth every penny of 300,000 when, based upon appreciation between now and then. And as soon as that train station opens, now they're just going to pop. And so if I'm going to get 100 grand's worth of equity manufactured in a 5-year period because of that pop that I get, getting 100 grand's on 8 houses is better than getting it on 4, right? And so,
sure.
So I'm probably going to do that when I feel like filling the paperwork out and dealing with getting the mortgages. I'm probably going to go ahead and do that because I will kick myself if I'm right on this call and these houses do pop by 100 grand a piece. And as excited as I would be about having 400 grand in manufactured equity, I'll be mad that I didn't get 8. And so it's kind of along those lines. That's the balance. But you'll notice today I've got no mortgages on them. So I think the way you do, which is, if nothing else ever changed, I didn't mess with that, I'm going to be so happy I have those 4 houses. They're paying me $1,000 a month each, so I'm at that $48,000 a year. I get $1,000 a month profit after taxes and expenses right now. And so I'm in my prime earning years, gray hair guy, still young enough to be dangerous, but old enough to be experienced. So I'm just trying to stockpile into the houses. And so again, if your instincts tell you don't want to pull these mortgages out and pull capital out because you could see the finish line in front of you of knocking the loan out on that property, now that becomes full-on cash machine. Now it just sends you mailbox money. You keep doing that, saving as hard as you can. Like, it's going to be a lot easier to save when you're getting $750 a month straight cash out of that condo, right? So that just piled into the little house fund, gets to a certain point, and maybe you just, the next house you buy with some leverage. But leave the cash machine in Houston as that original. Like I always picture like you're pulling a pull starter on a generator. You fill it up, you pull the starter, and it just chugs, and it it doesn't require a lot of energy from you anymore. And so I like that plan too. There's no really wrong answer to the question. It's just personal preference.
But that's again kind of the challenge because and especially pre-COVID, I mean, it being in Texas, it's just the hottest real estate market. I mean, just California investors, they'll just dump their money in and they won't ever even look at the house. I mean, in the middle of me trying to obtain this place, the owner told me no several times. So I kept trying to find a duplex and I got outbid 2 different times and I gave full asking price on properties that were only on the market for 2 days. So it's also like, well, do I pull out that equity and go get more land in Texas? Because, Texas is going to continue to be a hot spot for people to move to as well. So, I just don't know. I don't know what to do. And that's kind of why I wanted your opinion on it.
So why don't you do this? Why don't you price out what you said? You said it's worth 130 or 100. What did you say it's worth again? The condo.
I mean, I keep up with it through Zillow. I don't know if you place it Zillow is accurate or not, but they go from like 100 to 105. Right now, it's probably at like 105 plus.
And you said 30 something?
Yeah, like 34. My mortgage is 414. HOA is 439, but that includes all electricity, trash, water for the tenant, and then insurance is 39. I charge 1,200 for rent. Property taxes are about 1,500 a year, so losing about 180 a month. And I mean, that's another.
Go ahead.
Another thought I had for you too is like, I also don't know what to invest in because before COVID hit, I was thinking I was going to move to commercial properties. I was talking to a mentor that does a lot of commercial, and he was like, they're a lot more low maintenance. People don't live in them, so they don't get as beat up. They're responsible for a lot of the stuff, but then commercial is going to be dead right now.
Yeah. I would stick in residential. I would definitely stick in residential. Excuse me.
But what about condos? Condos don't have roofing. You don't have to deal with plumbing. I mean, what are your opinion on condos?
I like them if the maintenance is not too high, and if you do the math and you think, okay, what would it cost me to pay somebody to maintain the property in the same fashion? Like my tenants, because I got single family homes, they cut the lawn, and they got the utilities, right? So that's something that you just look at it side by side and say, if I'm going to pay third parties to do all my maintenance, either way, one of them I'm locked into a condo association and they'll do a good job of it, no doubt. On a house, I got some flexibility of who I want to do it. They may not do as good of a job. I may have to have some hassle on my side to have to find the right vendors, maintain the right vendors to do that kind of stuff. In that situation, though, you're not at the mercy of a condo run amok. Like condo complexes increasing the fees and saying, geez, I probably couldn't have, you increased my HOA fees by 10%, but why? Like, why did you do that? My rent didn't go up 10%, but yet somebody somewhere wants to resurface the pool area. And so I'm getting a set, but I like houses more than condos, but I have condos. Condos fit for me when I bought them when my kids were really young, and I really wanted it to be totally hands off.
Buy a kid, buy a condo, right?
Yeah, have a kid, buy a condo. Yeah, exactly. So that was a hands off kind of a thing. Houses are also sometimes better than condos because if prices do get soft, if demand gets soft at some point in the future, and it always will, right? I don't know if the prices will come down, but demand can get soft and you could be in a buyer's market. Condo owners tend to undercut each other faster on value because the things are so identical. All right. So when there's another comp over there that somebody sold cheap because they wanted to get out, or there's three people that want to sell their condos in the complex and somebody goes and does the unthinkable and just dumps it, now you're being directly affected because you have the same unit as they do. Where houses more like snowflakes, more different than all the others. But it's kind of one of these things where, like I got on my screen right here, I'll show you something kind of cool. Let me just pull this up. The ease of ownership, because there's so many people in this industry that are so bent on doing it the hardest way possible, meaning I want to buy a junker. I want to get a great deal on it. I want to fix it up and everything else, and all the risk they take. I go the opposite way, as I think it sounds like I try to go the easy. I'm working too hard at my job to make the money to be able to spend too much energy dealing with wild cards like shitty condition, right, and having to fix things up and managing contractors and everything else. So we're launching this program now called RW Select. RW stands for Renters Warehouse. They're all brand new homes. Right. So we've got builders now that want to reach small investors, and we've got all these tasty little brand new models here that I'm going to be able to buy in places where I'm not anywhere near. Like I won't buy a house that might need repairs outside of Charlotte, which is where I live. Okay. But I may go into Macon, Georgia, or Columbus, Georgia, or some of these other places just because this house is perfect. It's brand new. It's under warranty, for crying out loud. you know?
Right.
So the ease of ownership of a condo appealed to me when the time was right for that. The ease of ownership of a brand new home is similar to that as well, because I know I'm not going to find out that my inspector dropped the ball and I've got a blown HVAC system 6 months into this, right? It's brand new,
Sure.
it's under warranty. So I do lean very aggressively towards not being aggressive, and almost being a little boring when it comes to buying stuff that's going to be easier for me to own and easier for me to lease out, because tenants are absolutely crazy over renting a new house. They don't even think that's possible. Like,
Yeah.
who would have thought you could actually rent a house that nobody's ever lived in before? Um, so, again, don't be. I've taken heat, lighthearted heat from people who say like that my way of doing it is like almost like pedestrian. Like, why don't you work harder and get better deals? I'm like, because I take all my risk in my business. I don't want to take any risk over here. I want it to be easy on me. I'm trading earned money for, equity growth and income. And I want to buy the house I want. And so I also pay asking price for things. Um, condos are no problem. Just make sure that you math up. If I'm going to pay 350 a month, am I getting something close to that in direct value by the maintenance company? Like, what are they actually going to do to make sure that, like you said, like a roof is great, but what happens? Do they assess it if it gets replaced? When was it replaced last time?
Right. Sure.
But back on before I get off the Houston thing, if you have $100,000 condo and you have a $34,000 mortgage, go do the math. Go to one of the mortgage calculator websites and just go do the math on what would happen if you took out 50 or 55. Call it 55, so you got 20,000 bucks straight out of that thing to go into your down payment pile. What would your mortgage payment be if you borrowed 55,000 bucks at today's rates on a 30-year loan? And just see if that, because you can always pay more, right? You can always pay it down and bang it down, but now you've got 200 grand. That 200 grand will help you get into another property that'll generate some other positive cash flow someplace else, and like model those things out to see if you were to always stay at less than 50% leverage, you're like the most responsible investor there is out there. You're not going out there doing 75, 80, pushing 90%. I know people who are like, oh, I buy it like I'm an owner occupant. I put 10% down and then I move in for a day and then I move out. It's like, yo, you're not going to cover your expenses when you have
Right.
a
Sure.
mortgage, you know? But just do that math so you can kind of look at it, live with it for a second, and get a feel for, as long as you have that in your hip pocket, if some great opportunity comes along on the other side of you, like that's the side of you that wants to be conservative and knock these mortgages out. Then there's the other side of you who wants to buy houses faster. And you've got to
Yep.
navigate between those two versions of you to figure out where the balance is. Equity in that condo is a beautiful thing to leave exactly where it is. It's also a beautiful thing to responsibly extract to go make another responsible investment.
Sure.
That makes sense?
It does. Well, when do you, I mean, when do you decide to sell? Because it's like I could refinance that condo over and over, but at the end of the day, isn't it always good to keep it, even if?
Yeah. I'm selling the condo that my daughter, that was my daughter's college fund. She's 18. She's going to college. I'm selling the condo up in New York because I moved out of New York. I'm not going to use that money for college because I got other money for college after all. I'm just going to roll that into another property down here. That's a condo complex where the taxes in that town are running amok. And so I'm not, my rents are going up, my values are going up, but my yield is not going up because my expenses are tracking faster than my rents are. So that's
So
not,
cut
I'm
your
not
losses.
doing that shit. So I'm going to get out of there because the government went against me in that situation, right? But I mean, a condo in Houston just never going to be a bad investment. If there's ever, funny thing about Houston is that they do, especially the Houston Chronicle, loves to talk about how, oh, oil prices are down, Houston's dead. Oh, a hurricane's coming through, Houston's dead. And Houston always comes back stronger than ever. Like they don't
Right.
even get that they live in one of the strongest cities in the world. Um, and owning a chunk of that is just a good idea.
Hmm. Yeah, for sure. Yeah, so I guess it will just come down to things like you said, if property taxes and maintenance kind of start creeping on you, then that's when you sell. Then
And then rolling it up. I mean, this part of the snowball is that thing is doing great, but let's say you find out about something like my train station story, right? Let's say you found that we're going to open up a light rail station in some outskirts of Fort Worth that was going to get people into town in 13 minutes. You're like, holy cow, that's going to be hot. and then you find a triplex, but you're short, and you really could use $75,000 to make that deal. Well, then you roll out of the one in Houston. It's almost like this. It's almost like I think of it as like reincarnation. Like the soul remains, the vessel has changed, right? The equity is the soul. So if the equity is building a Houston condo, and all of a sudden you see someplace else, you go transplant the soul. You say thank you very much to the condo. You sell it, roll the equity in a 1031 exchange into that triplex by the new train station or whatever it is that you fall in love with. Um, and as long as you 1031 exchange it, you didn't do that's sort of like if you catch a wave and then the wave levels off a little bit, and you can catch the next wave and that levels off a bit. That's a way of not taking risks on buying junker properties, but doing the thing that I like to do the most, which is try to pick the places where the harbor is going to rise, the tide is going to rise faster for reasons like, okay, they're putting an Amazon facility. Here's a neighborhood a mile and a half from the Amazon facility, and I could buy houses for $160,000. I'm going to go buy two, right? But I got to get my money out of Houston to do that. So you just got to keep your radar up for things that are going to have outsized demand coming their way. And then you think about rolling into it.
Okay. So maybe then what I should do is just keep up with my research and scouting out, the city or the opportunities. And when the opportunity comes, then pull the equity out, not just go pull the equity out just to go find something.
Right. Yeah. Yeah. Always scout the stuff. I'm just looking at DFW light rail. Do you have one of those? Is there light rail expansion?
Man, I just moved here a couple months ago. I don't think we do. We might though.
That's the kind of stuff. Like one of the things that's fun. I don't know if you've caught this tip. I think I might have used this someplace on Instagram. Is that you do a Google search and do a saved, what do you call a Google alert, where you can get results and do like Fort Worth approves ... 70 million incentives for linear. What the hell is this? 70 million incentives for a linear labs electric motor plant. Okay, where is that going to be? Right?
Okay.
You set the alert for that. You could save this as an alert, and anytime a story comes out that they approve the budget, they approve 2 billion blah, 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 incentive package for that linear company. This is where you'll see, if they approve the expansion of a hospital. And then you read the article and you see they're going to hire 100 nurses. Boom, what's walkable? Right? What can I buy that's walkable? Is there a duplex walkable to that hospital? Because I'm going to have that place occupied all the time, and they're good paying tenants, and the property values may go up as a result of new artificial demand that came in because of that announcement. That makes sense?
Yeah, that's a great idea.
And it just keeps you passively reading about what's happening in the area. Linear Labs is dominating this one.
So I mean, like the city that you said that you're looking at investing in that has the light rail going in 2024. I mean, is this kind of how you found that same source, or heard about that from somebody?
Exactly. I was just researching I looked up transit plans. So I live north of Charlotte, where they were expanding the highway, and I was looking around at the highway expansions going in different directions, and it led me to the 2050 or the 2030 transit plan for Greater Charlotte. So they spent a couple $100,000 to get a study done on how they're going to deal with the 25% increase in population they expect in the next 5 years. So it's highway expansions, light rail. And so I looked at the light rail map, and I found a town that has breweries and coffee shops, is almost every store in town. It's a little walkable pedestrian town with this train station that's going to be going in. And that was all because of the stuff like that. Just, Charlotte City Council approves. You could get more nuanced with it. But look at this. It was plan, air plan approval. I just saw something that was Blue Zones project approved in Fort Worth. What the hell is that? What are Blue Zones? I don't know. But I'm a junkie for this kind of stuff. So to me, like when I'm done working, I start playing with these kind of things. Right? Like looking around for some gem of something going on out there that anybody who wants to pay attention can find, but they don't. They're busy trying to find some little old lady who wants to sell her house cheap when they could be researching, that Honeywell is moving 300 employees from New Jersey to Charlotte and plans to move 2,000 more. Where do they sign the lease? What's walkable?
Mm.
They may be putting a building taking at the edge of a shitty part of town where 4 blocks away there's an apartment complex with, an apartment house with 3 units in it. That whatever. You get the gist. That's kind of the idea of
Yeah.
and then
You
you'll
just kind of go.
fall in love. So okay, so here's your answer. If it were me, leave the equity there in Houston, keep saving your ass off, but then start doing this um, research. Like insider trading in real estate is not illegal, right? If the mayor tells you we're going to approve that train station, if the mayor tells you, yeah, what do you see what happens at the hospital? You can go to planning board meetings. They're public, okay? Architectural review board meetings, planning board meetings. That's where when anybody wants to do anything to change real estate, to change zoning, that's what I saw. There was a zoning thing here. Here, look. Fort Worth ISD approves controversial new zoning plan. What is that? What's the zoning plan? This is redistributed. Tell me the story. Yeah, I don't feel like reading the whole thing, but you get the gist.
Mm-hmm.
You go to that.
Yeah, definitely good source.
You go to the meeting. You watch the meeting unfold. You see that some proposal came up for. See, here's what you'll figure out in those meetings. There's going to be a lawyer or two who are representing everybody who wants to get approvals in that town. All right, so you can get a feel. Let me turn the screen off here. No, that's the wrong one. So you can get a feel. So you go to the planning board. You're sitting through 3 planning boards. The same lawyer's there all 3 times, representing 3 different clients. Right now, you know what that lawyer does for a living. He works the planning board to get approvals. Some builder wants to do a subdivision. Somebody's going to tear down some house and build something else on top of it. They got to get approval. Somebody else is building a strip mall. Same lawyers coming in, same architects. They all work. It's like an old boys club, right? You go to that lawyer and say, "Can I buy you a cup of coffee?" And then you ask them, "Are they going to approve that complex? Are they going to approve that thing?" And he'll be like, "Yeah, they're going to approve it." That's not insider trading. You go to jail for that if one of the executives in a company tells you about some announcement and you buy stock. But it's not illegal in real estate. It's just knowing what the hell's going on.
Right.
So you start digging in some of the geographies around the Dallas-Fort Worth area, get under the hood a little bit. It's a lot of fun, and you will come up with gems. Like my train station in Belmont, North Carolina, I heard about it, read about it the way I told you, but it wasn't approved. I sent an alert, City of Belmont approves. And as soon as I saw that they approved this train station, I ran in and bought the house as fast as I could. Because now I had crossed over the point of no return, but I maybe could move quick enough before the sellers got the idea that they should charge more for the house.
Well, so what's your long-term goal? So you said you bought 4 houses, right?
I want to have 25 paid off in the next 10 years.
So that you want to have 25 paid off?
Paid off houses in the next 10 years. Most of my capital has gone into building these businesses in single family investment. So Own America was the name of my company before. I put a lot of money into growing that and building that technology company. It got acquired. That paid off. I start buying houses. But my goal for this strategy right now, I also own pieces of office buildings in New York, not the city, the suburbs, that I want to get out of so that I can buy more houses down here in Charlotte and maybe some other places. But my long-term goal is to accumulate in my 50s. I've got 9 years left, 25 paid off houses.
Why 25?
Because I think I probably can't pull off 50. And 25 is $300,000 a year in income.
Wow, awesome. That's great. Well, so do you, what do you think about, like, do you think that, I saw your post earlier about how things are a lot better than we thought they were going to be with COVID and so forth. And I don't want to just like hammer on COVID, but do you think in the next few months that people will default on their loans and there's going to be a good amount of property out there to scoop up? Or what is it?
Can't ignore the fact that we put a temporary stopgap on unemployment, right? Those PPP loans, almost $1 trillion worth of relief to companies to keep employees on the books. They don't have to continue to do that. forever, right? So there can be a reverberation of the layoffs that didn't happen, or the temporary the furloughs that became rehirings. So I don't know if my gut reaction is that there is such a robust real estate market right now that if there are a lot of foreclosures, the banks aren't going to give them away anyway.
Mm-hmm.
Right? Last
True.
time they got slammed with such an outrageous number of foreclosures, like hundreds of thousands out of nowhere. They had no systems to deal with that. It was a 50-fold increase in the number of properties, and they did some dumb things in terms of just get it off the books, just sell it to whoever wants it. It's a housing free fall. It's a housing meltdown. We have a $300,000 loan on that unit, and it's only worth 210. Like we're screwed. Just dump it. Get it off the books. We're taking a beating. None of that stuff really exists right now. The housing is not inflated. The housing demand has not declined. In fact, it's very strong right now. You said it, right? You're having to pay asking price, and you're still missing out on opportunities.
That was pre-COVID though.
That was pre-COVID. It's happening still now. It's back.
Okay.
Like home sales are hot as a pistol right now. There's no inventory because it's getting gobbled up so fast. That's true. So I don't see the demand. I don't see any reason that demand is going to diminish. And I don't, especially in entry level housing, because if the buyers lose confidence because we do see a big increase, so we hang on to high unemployment and the economy goes into a slump, investors have now proven that they will jump into those slots, right? So 15 years ago, we didn't have investors like you, me, and Wall Street that were going to jump all over these properties to turn them into rentals for all this rental demand that gets created when the economy slumps and home ownership declines, right?
Mm-hmm.
So I see the demand as being too robust and too multifaceted for, even if there are a lot of foreclosures, you're going to pay normal prices for them. Because the banks have also figured out how to deal, right? 12 years ago, they didn't know what to do with all these foreclosures. Now they have systems in place. They bring them out. They know how to list them. They know how to put them on auction.com, and they're not going to accept a beating on those like they did last time around.
Okay, true. That makes sense.
Yeah. I don't know how to get a good deal on a house if you define that as getting it cheaper than it's worth. I know how to get a good deal on a house if you define it as knowing where the progress is going, right? Where the population growth and demand is going. I've got a good feel for that, and getting out ahead of it has been working for me.
So, I mean, like on the four homes that you just bought, how old are they?
Two of them are built in 1905, and two of them are built in the 90s.
1905?
Yeah.
It must have been renovated once or twice, I'm assuming.
Sometimes, yeah, they're little brick, solid little brick places. They do you have mill towns down in Texas, where years and years ago there was a mill, and they built houses around the mill for the employees?
No, not really. Just some like old factories.
This was big I guess cotton mills and textile mills and and tobacco mills are all over the Carolinas.
Leadership built on trust. Joe Biden.
Ad started playing on the website I had up. So anyway, what you see is you'll see a big brick complex. There was a mill factory, and then they'll have 150, 200 houses around it. They're these little tiny 1,100 square foot little houses for the workers. That's the neighborhood that I bought in. So it was half of them were in this 1905, but they're like, there's single story, like you couldn't knock them down with a hurricane.
And so, like, may I ask what you paid for it, and then what your rent will be?
They're about $200K a piece, and the rent will be $1,500 a month.
Okay. So, because out here in Texas,
what's that?
Like out here in Texas, like pre-COVID, when I was just doing all my research, like nothing hits that 1% rule anymore out here. I achieved that with this duplex. I got a fair deal on it going off market. I mean, these were going for like 400, and I got mine for around 315. Needed some renovating, but at the same time, I mean, they're flying off the market, and they barely ever came up for sale. So, I just didn't know.
I don't actually follow the 1%. Is the 1% rule that the 1% monthly rent for the purchase price?
Correct.
So that would mean that I'd be at $200,000. I'd be looking at $2,000 a month in rent to hit that rule.
Mm-hmm.
I'm looking at getting at least a 5% yield, which on a $200,000 house, that's 10 grand a year profit, right? I'm getting 12, so I'm doing a 6% yield on these, and that was my number because that's like what the market bears. And so if I can get 6 in cash and then another 4 in appreciation, I'm at 10. I'm really happy with that. But I'm going to get better than 10. I'm better than 4 in appreciation because of my train station. I think I'll get like an average of like, by the time when that thing opens up, I think it'll wind up popping and I'll wind up with a much higher average appreciation rate because of that. Right. But then it's conceivable then that I'll want to sell those houses and do something else because I will have caught that wave. You know?
So you're not really picky on what you buy. You don't really focus on much. I've heard you talk about owning commercial spots, condos, multifamily, brand new, old. You just
I
kind
like
of
houses more than anything else now. I've evolved that I only want to buy houses, probably only want to buy single family. I don't trust office space anymore. I'm working from home. I like it. I don't know if anybody else is going to go back to the office again. I know I don't want to. But I like single family, and I'm less concerned. I'm actually more concerned with where I buy than what I buy.
Right.
Right. What I buy is still important, but what I buy when I pick the right where, I buy the easiest house to own and the nicest one to rent out that I can afford.
Okay. No, never much in multifamily.
I haven't because there's something about no matter what happens in the future, that house could be sold either to an investor or a home buyer. The existence of the home buyer market as sort of like an insatiable demand that never really goes away is appealing to me, right? Like a single family home is just core demand by mainly home. Like the value of my houses is not dictated by what investors are paying for them. It's dictated by what unsophisticated home buyers are willing to pay for them. And we could go into a recession, but they just got married, they're buying a house. We go into a recession, they just had a kid, they're buying a house, right? Whether it's the right time in the economy or not, they're buying a house because it's the right time for them. I like that as just kind of like a general overarching risk management feature that no matter which economy goes great, my house gets more valuable, my rent continues to go up, I win. Economy goes into shitter, my rent's going to go up, and I'm still going to win. And I just got to hold off until the economy comes back again for my appreciation to pick back up again. Does that make sense? So I don't think you lose that with a duplex. Once you get to a 4-family, a duplex is almost like can very often be bought by someone who's going to live in half of it and rent the other half out. But you get much further than that, and now you're into straight up multifamily, and that just loses that little edge.
Yeah.
For me.
Yeah, well, I consider like maybe a triplex or fourplex next too, but I just don't know which way to go.
Yeah, well, you got lots of. It's a big country, man. There's a lot of good options out there, but the good news is you're not starting right now. You've got a great position in a machine in Houston, and now you got this duplex. So you got a great foundation that if you did nothing but scouted for your personal investment thesis, like my train station thesis, you scout and you wait. You've got money stockpiled, and you just keep saving, and you'll find. Listen, at the end of the day, you might have one crazy mixed bag of stuff, right? Just scattered around, no real theme except for the fact that you liked it for reasons that had to do with your own intuitions.
Yeah, my problem is I'm impatient. I got to remind myself to be patient. This is such a long-term play. It's just like fights every grain against my body.
Yeah, I know. Well, that's you get your energies out flipping trucks. Then that's the way to satisfy your need for short-term gratification.
Man, I actually went to Odessa about a week and a half ago and found a 1991 Ford Bronco for sale that I snagged. It was garage kept, real clean. So got that one on the market right now.
91 Bronco. Huh? Let me see. I forget. Do you think the new Bronco release is going to help you? Probably, right?
Oh, I would say so. It couldn't hurt.
Right.
Not at all.
The OG Bronco.
Yeah. It's a Eddie Bauer, so it's maroon on top and then tan on the bottom.
Awesome. That's
Luckily,
great.
it's not white.
It's not white. Yeah, you don't want the white one. That's cool. Yeah, I just saw that Bronco release, and I started getting like desirous of getting one of those. I'm like, no, I'm not a truck guy as much as of a car guy. But that's actually, it's an amazing time to be in the used vehicle business because the level of transparency, the fact that you can find somebody miles and hundreds of miles away, thousands of miles away, who for whatever reason just wants to get rid of something. And how much, give me an idea on that flip, that truck. What did you pay for it, and what can you sell it for?
I'm probably into that one about 5,500,
Wow.
and I don't really know. I've been told I hit up a couple other Bronco guys, and they said anywhere like around 8 to 10. So I've never done something this old. Usually I stick to like 2002 to 2006 Chevys, like the 3/4 ton trucks.
Yeah.
But I mean, I just kind of went with this one, so just kind of riding that wave, but we'll see.
Hey, check this out. This is I don't know if you've ever been to Street Side Classics. They've got in their Fort Worth showroom, they've got this. That looks a little bit like what you're talking about. Is that Eddie Bauer? No, silver anniversary. But they're getting,
Yeah, that looks good.
They got 20. They were asking 22 and sold.
Man, crazy.
It's pretty good.
Yeah, I just posted it like 2 days ago. So just, weeding out the not serious and seeing who's got the money right now.
Yeah, so that's a fun. Now you got me thinking about. I may be calling you back and saying, okay, so how do you go about this? Because I'm a car freak, and I love the used car transparency of the global market on used cars, and how you absolutely find people. Like I bought this Porsche 911 in 1997, and it's got 160,000 miles on it, right? Like, why would you buy a car with 160,000 miles on it? It was owned by a guy named George Drolsom, who was the first American employee of the first Porsche factory in the U.S. in the 60s. So he was the first American employee of Porsche North America. He then became a race car driver, won a couple of races, and then he was a brand ambassador. This was his daily driver until he died. So I'm literally reading the guy's obituary, which was like, he had a wife and kids, but he really loved Porsche. Was like the whole obituary. These things will last 300,000 miles if they're babied. This thing is probably babied. That car with normal miles on it is 75 to 90 grand. With my over miles, it was 50.
Wow, and you got it for what?
I got it for 50. With the
nice. What color is it?
It's dark blue. Yeah, I think I got it on the screen back here.
You must love it.
Yeah, here it is right here. There it is.
Yeah, you definitely have to go to the car wash a lot with those dark colors. They look good though.
Yeah, dirty quick though. You're right.
That's super cool, man. That's like James Bond.
Yeah.
What year is that?
It's a 97. That's a 97. But it gets you start to realize that like his widow wanted to unload the car and nobody was looking at it at the higher prices because nobody sets their parameters to unlimited miles, right? You put a cap on it. So I went on eBay and I just bought it on eBay. I didn't even look at it first. So I wanted to get my hands on one of these things, but it's so true that you can find people that are just dumping things. Like you'll make 10 or 15 grand on that Bronco?
Oh no, I highly doubt that. I mean, it's not in perfect condition. I mean, it's a clean truck. I can see some pics of it, but no, I mean, if I even got 9 for it, I'd be very happy. I mean, honestly, when we sell trailers, we just say like, if we think we can make at least if you think you can make your costs back, then it's not a lose situation. And I definitely think I'll get my costs.
Cool. I think it's a great combo. Flipping vehicles in order to park your money in houses is a phenomenal strategy.
Yeah, it's fun for sure. It's kind of risky. It's fun. Like you got to, it's a gamble. You got to negotiate. You got to get a flight. I'll go out there and fly them out, or fly out there and drive them home. So yeah, it's good. Last year, one of my good ones was this black diesel truck that I found out in Louisiana, just a small town, and the guy had just left it outside for the life of the truck, and the paint was just shot. But he had a company truck, so the miles were really, really low. It was a 2006 LBZ, and this is like a very sought after Duramax engine in Chevy trucks because it's the last year that they didn't put emissions on these diesel engines. So they've got tons of power. You can get 20 miles to the gallon. Excellent. And so I drove this truck home. I got it for 10 grand. And then I had it painted I got to put like a $2,500 paint job on it. And then I had to do a few little things around the truck, and I ended up selling it for like 18.5, and I made like 5,500 bucks.
That's awesome.
It was great.
Well, because people look at the pictures on the web and like, that looks like shit, and they don't want to buy it. Yeah.
Man, pictures are everything. Pictures are everything for sure. Absolutely. People don't want to clean things up, just like homes. People want to walk everything ready to go. No one wants to work on stuff. And if you can do the work yourself, then you'll make that money, which with homes.
Yep. Cool, man. All right, listen, I got to jump. Keep me posted on what happens next. All right, let's have this conversation again in a few months or whenever you want.
Appreciate the time.
Feel free to call.
Thanks, man.
All right, take it easy.
Bye, Greg.
Bye, Greg.